come back. All right, my first guest is cautious on a Mag 7. Thinks the return on investment something of a valid concern, and we're bringing out Great Hill Capital Chairman Thomas Hayes. Thomas, okay, listen. This since 2021, the top 10 stocks, 55% of the market. It's hard to fight against this because the guessing game on when this wouldn't be a valid investment, you would have missed out between then and now.
Well, as you know, we've been raging bulls since the fall of October 2022. We've recently, in the last week and 2 weeks, raised a little bit of cash. Nothing crazy. We just think that this earnings season is going to be the first time that people kind of wake up. Earnings growth for the Mag 7 has cut in half from over 30% last year to under 15% this quarter, but the multiple has not yet contracted at all. We think they got to consolidate a little bit.
I think the irony is that maybe the multiples are down from 2021 in the Mag 7, right? I mean, I think the chart is something like this. Now, again, this is much higher than people are used to. Also, we can't expect them to grow at the same pace forever, right?
Correct, but we don't have to assign them the same multiple. 33 times earnings growth for 15% earnings, 33 times multiple for 15% earnings growth, while the rest of the market, you cut that back, you've got accelerating earnings growth, you have a more reasonable multiple, there's opportunities under the surface. You don't just have to be, and if you're exclusively in indices, you are overweight these names that are probably due for a little bit of consolidation before the next leg higher.
That's why in part why you're a stock picker.
That's correct.
You took profits out of these names for the most part.
We don't have exposure. We have dramatic outperformance against our benchmarks, against our indices, with zero exposure to the Mag 7 this year. Our biggest contributor was Alibaba. You know, that was super hated in the last couple of years. Cooper Standard, unrelated stocks. We underwrite. We do private equity in the public market.
Let's talk about that for a moment, because you're a true buy and hold guy, right?
Yes.
I mean, this is how you make your money.
Yep.
And if people are patient, these are just some of the names you've mentioned on this show.
Yes.
Right? And of course, that move in Advance Auto, right? I mean, I was looking for it, right? And you were traveling somewhere. They say you were drinking champagne and something. So up 131% from January. This QXO up 32% from April. Yeah. And again, you hold these names. Google up 184%. Baba starting to make that big move. I think people thought it was going to happen maybe a year or so earlier with all the stimulus.
I did
but
too.
Now they're coming on. Are you holding all of these names? Would someone watching this show, would these still be viable investments?
Advanced Auto Parts, early days. QXO, early days, Brad Jacobs. Baba, still early days, one of the cheapest AI plays in the world. Google, we took profits some time back. So, yeah.
So now you had one or two clunkers, one or two so far, but I mean the track record's phenomenal.
Thank you.
Baxter is a name I bring up because you've mentioned it more than once in this show.
Yeah.
It's pulled back a lot.
Yes.
Are you a buyer? Are you still holding?
Yes, we've been buying this in the last 2 weeks aggressively. New money coming in, we're buying it aggressively. Look, healthcare as a sector is at its lowest relative valuation to the S&P. This is a 4 times in a 100-year opportunity to buy healthcare. We like Baxter. It's down because of the Hurricane Helene recovery. It's taken longer than expected, and the Novum IQ pump. They've got a new CEO coming in. He had a 6-bagger at his last company, ATI, within 5 years. He comes from Danaher. He's just coming in right now. This stuff is recovering. They've sold off the diabetes, the slow business. They've delevered the balance sheet. This is a perfect turnaround story. Solvency risk off the table. Trading at 9 times earnings, historically 16 to 17 times. This thing's going to reaccelerate. We think it can be a double or triple over the next 3 years.
So they sent me your notes last night, and they said you had an AI play, NOV. I'm like, wait a minute, that's a National Oil Well? Are you kidding me? So this is your sort of covert AI play. Explain it to the audience.
Okay, so they do onshore and offshore rigs for the oil industry. They do sales and they do service. This has one of the best balance sheets, over $1 billion of free cash flow, $1 billion of cash on the balance sheet, low debt. This has huge operating leverage to drilling, not necessarily the price of oil. And the demand for, data center demand is going up 165% by 2030. 60% is going to be natural gas powered. This is going to be a big beneficiary of that play. Furthermore, it's the energy has the lowest weighting in the S&P since 2020.
Right.
We were buying ExxonMobil when energy turned negative, made a fortune. When the weighting of energy gets this low in the indices, it's a huge buying opportunity. This is where we want to play.
My man, you've been killing it.
Thank you so much. I appreciate it, Charles.
Yeah. I'm glad someone's bringing back buy and hold. Good stuff, my man. All right, folks. Now, my next guest runs the